everyone, welcome back to Investment Physics. So today, let's do another level one talk. Yeah, I thought I want to talk about the hardest thing about stock markets because once you have dealt with the hardest thing, the other things are easy. So, you can figure it out. But let's do the hardest first. This is, of course, in my experience. Others may or may not agree. Um, The first one is what not to buy. Everybody is always asking what to buy next, like, what to buy, what is good, what is this, what is that, what can give most returns, all kind of things. But what's more important is what not to buy, because there is always some kind of hype going on. Right now, the rage is AI. Everyone is talking about Nvidia stock, C3.ai, ChatGPT. It will take over the world. Everyone's going to lose jobs. All kinds of things are happening around. So you might be tempted to buy these stocks because you are worried and you know that AI is the future of the world, and you don't want to miss out on these opportunities. So um, I'm not saying it's a bad thing or it's a wrong thing, but all I'm trying to say is you have to be always thorough in your analysis. Just because you have this fear of missing out or FOMO, you cannot jump into conclusions and buy something. And almost always, you will do better if you just buy normal, boring companies than jumping into all these very exciting things. If you have not done a thorough analysis, you may actually lose your money. So, think carefully before you decide to buy, and it's always better not to buy something if you're not very sure about it. The next one is even harder than this: emotions. You might think like, what is he talking about? Emotions, and I'm not talking about some failed relationships or love story or something like that. But the stock market is a very emotional place. Let me show you. So this is the S&P 500 graph. There is always some boom and bust happening every 7 to 10 years. Some variety of reasons. Sometimes it's same, sometimes it's different. There are patterns, all kinds of things. But there is always something going up, and whatever has to go up will come down. Um, so this is basically 2020. The world was hit with COVID. So let's say that you bought some stocks of S&P 500 on Feb 7, 2020. The index was 3327 at that point. And then COVID hit, everybody panicked, and the stock fell to 2305 something. So that's roughly like 1,000 points drop in just less than a month. And that is roughly 30%. Um, and you don't know anything, right? Like COVID is like, you don't even know what it is, whether people can die. There were no vaccines at that point. You don't know anything about it. Um, so this is when emotions run wild. uh, like if you open the app on this March 23, 2020, and you see that your investments are down minus 30%, you will have a lot of emotions, I can assure you. You will be like, I should have never come into stock market. I should have just kept money in FD or CD or bonds or something like that. You might even think, let's just sell so that at least I get 70% of the money back. What if the whole world is going to end? Like, you don't know what's going to happen with COVID. So let's at least keep 70% money and just ignore that you lost the 30% or things like that. But at that time, if you were able to control your emotions and do nothing, then in a very short period, like within a couple of months, your investments would have gained value and it would have even gone up. Like even now, it is way more than what it was in the pre-COVID period. So this is what emotions do to you in stock market, and this is how people lose money in stock markets. Um, on the other hand, if you are able to control your emotions, and even better, if you are able to predict others' emotions, you can make money out of it. So let's say that you invested on Feb 2020 and COVID hit, and everything fell. And now on March 2020, you are minus 30%. But There are some basic tenets that if you are in a good country with a good government and a strong economy, the stock market always goes up. This is like a given. Like unless you're not in Brazil or Venezuela or some country like that, if you're in India, US, Australia, Canada, the stock market always goes up. This is a given. And if you had controlled your emotions on March 2020, and if you had bought more stocks, then you would have gone up from 2300 all the way up to 4700, and even now it is 4400. So you have almost doubled your money, and all this in 3 years. So this is the role emotions play in the stock market. I want to also talk to you about another crisis that's happening right now and which still has opportunity to make money for a few of you. The US is going through a banking crisis. Four banks have already failed: Silicon Valley Bank, Silvergate, First Republic, Signature Bank. There are a couple of more banks which may or may not fail, but they are kind of on ICU and everybody is closely watching. Um, so this is again an exact same scenario where emotions are running wild. Nobody trusts bank stocks. Everybody's like banks are bad, blah 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 blah. But if you control your emotions and if you buy the bank stocks, let's see what happens. So I've just picked an index. Like I said, index is a basket of stock. This particular index ETF is called as Vanguard Financials. There are a bunch of them. I just Googled and this was a random one I picked. If you see the expense ratio, this one is 0.1%. And you can also see expense ratio higher or lower in other index funds if you research. If you go to holdings, it will show you what are the banks it comprises of. Most of them are large banks. And then let's look at the graph of how this has performed. So on Feb 2023, it was around 90. And then Silicon Valley Bank failed because of a variety of reasons that I won't go into here. And it fell into 75. So from 90, it went all the way to 75. It's definitely like 15-20% drop. And if you had controlled your emotions then, like I said, and you had bought more at 75, it has gone up to 81 now, which is 10%. This still has a potential to go up from 81 to 80s or 90s, which is another 10% probable rise in the future. I do not know how long this could take. I am expecting in the next 1 or 2 years, this will happen for sure. A very important thing to remember is, let's say you controlled your emotions and some stock fell down and now you're all in to buy it. But that company could go bankrupt. I'm talking about individual stocks. If you're buying an index like this, there is usually very little risk. This usually always comes up. But let's say if you go individually and buy Bank of America or Wells Fargo or something like that in a crisis, then you have to be more prudent in your judgment. You have to read the earnings report. You have to see the metrics. You have to understand what these banks actually do. What is their capital adequacy ratio? What is the non-performing assets? What is their last performance in the stress test? A lot of things go into each sector. I will explain all of those in a level 2 video. So it's a little more tricky if you are buying a direct bank stock, but if you are buying an ETF like this and betting on emotions, it's an easy way to make money. You don't even have to know the charts or read much earnings report or consider metrics. These are like very simple things that anyone can do. If your country currently does not have a crisis, just keep holding cash or keep investing in whatever you can. And when there is a crisis, be ready to play it with controlling your emotions. uh, uh, like I said, the most important thing when a crisis happens is stay invested. If you have a strong heart, buy during a crisis. If you find value in my content, please like, share, and subscribe so that I'm motivated to produce more good quality content. Also, please post comments about feedback or whatever other topics you may want me to talk about. Thanks.